This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Remember when you used to take a picture with a camera that actually had to have the film inside the camera developed? Wow, when was that? Well, you know, for years the term film was synonymous with the name Kodak. But Kodak stock has plunged in the past decade. Part of the problem? Traditional film sales dried up with the dawning of the digital age. Kodak shares have dropped more than 65% this year alone and trades for under $2 a share. And just this week, the company said that it had to actually take about $160 million from a pre-existing $480 million credit line that it had been keeping on the side. Here now with more on this stock story, strategists Tracy Reinick and Bill Wilton. Tracy, we'll start with you. 119-year-old company. What's going on here? Is nothing sacred anymore?
No, apparently not. You know, they had the advantage for many, many years. Even up into the 1980s, they controlled 2/3 of the film market. But as you said, digital came on board, and while they should have been prepared for it because they actually invented the first digital camera in 1975.
Right.
But they kind of put it into the back vault and said, oh, we won't worry about that because we dominate this other industry over here. And then everybody else, you know, rushed past them, and they've been trying to catch up ever since. They do have some good things going for them. They actually have a huge patent catalog because they've had a great research and development business for forever.
Right.
So they have about 11,000 patents. They license out a lot of their technology, and they've made a couple $billion since even just the last couple of years, since 2008, off of just the licensing fees. So they do have some assets there, but you know, can they turn it around in time?
That seems to be the question. Bill, if we take a look at the chart, just this past Monday, October 3rd alone, the company lost a quarter of its value.
Yeah, I'm going to get to that in a minute, but you know, you kind of mentioned one thing. You know, we always used to look at the old photographs and things like that, but this chart shows, if anything, that the market really doesn't care about the sentimental things in life. You can see that the shares used to be trading, you know, $30, $40 a share. That's gone. The new normal is that this is going to be trading in the penny stock range. It's just that type of company. Plenty of companies come in and out of the Dow components. You know, it's tough to get over, but the biggest thing we have to do is take a look at this chart and realize that this is not a Dow component anymore. It's not that type of a stock. Now, that doesn't mean that there's not going to be plenty of volatility for those people who want to try to get in there and start trading it. You can see the swings just in these past few months, and you mentioned them drawing on that credit facility. You can see what that did to the stock. We've seen wild fluctuations within the share price, but the key here is to treat it almost like an option. You know, it's easy to say, oh, I can pick up shares of Eastman for $1, but you still have the potential to lose 100% of your investment. So while you think of it as cheap, you have to look at it in terms of percentages rather than dollars and cents here. In this chart, we'll show you that.
So a couple things here. Just because it's trading at around or a little bit under $2 doesn't automatically mean it's going to the pink sheets.
Not necessarily, but you know, one thing, you know, when we're looking at these charts, you always want to look for levels of support, trend lines, momentum, just about anything. But this is actually a chartist nightmare because there's no discernible pattern. It's completely driven by headlines. So you're really rolling the dice if you want to go ahead and pick up some shares. Maybe it's going to bounce back. It won't hit the $30 mark again, but there's still plenty of gains that could be had, but there's also plenty of losses on the other side.
So investor beware on this one, I guess, is the bottom line, right?
Yes.
It could turn around, but won't necessarily mean that it will turn around.
Yeah, and it's
could go either way.
Not going to be the glory days, we'll just say that. So don't expect it to go that far.
How much time do you think we have left on this story?
Your guess is as good as mine. It's one of those stocks, you know, you mentioned them drawing on credit facilities. That's never a good thing. There's bankruptcy rumors swirling around.
Moody's has already downgraded them, right?
Yeah, they've denied the bankruptcy, but that kind of got started because they hired Jones Day, which is a known law firm that puts together huge bankruptcies. But some people are saying that the reason they hired them is because they are trying to sell part of this patent portfolio. Some say about 1,100 digital imaging patents. That would be about a $2 to $3 billion sale, but they can't sell it to someone if there is the possibility of a bankruptcy, because even in a normal person's bankruptcy, you can't just get rid of assets ahead of filing because it would be, you know, considered fraudulent and things like that. So the company's denied it. They did draw on the line of credit, but they have about $1 billion in cash, or at least as of the end of June they did. So they're not in, the awful dire straits, but they are definitely scrambling to turn it around.
Yeah. Is Kodak's picture fading totally? Only time will tell, I'm afraid. With Tracy and Bill, I'm Terry Ruffalo.